Hey guys, welcome. Today we have our title agent, and we wanted to talk about some things about title insurance, about anything title related, right? There's typically three sides to a purchase transaction. There's the financing side, we have the buyer side, which is mostly handled by the realtor. We have the financing side, which is mostly handled by a broker or a lender like myself. And then we have the title side, right? The title side is essentially where we find out what liens are against a property, if there are any open permits, any violations against the property. And the title insurance is a very important part of the transaction where the insurance company, the title insurance company, is issuing title and actual title insurance policy. So to answer most of or very frequently asked questions that we have about title, we have Magda with Sun Life Title. Magda, welcome. Thank you for taking the time to answer some frequent questions that we have from our clients.
Good morning, Mario. Thank you for having me.
My
Uh,
pleasure. So I guess we can get right into it. A very or the most frequent question that we get is what is title insurance? So can you just kind of give us a brief overview of what title insurance is, what it does, if we need it, if it's required, and so forth?
sure. So, title insurance is a policy that you purchase at the time of purchasing your property. The policy is there is actually two policies. There's an owner's policy and a lender policy. So, if you are taking out a loan, you'll be required by the lender to purchase a policy for them. And basically, it's protecting uh, the owner and the lender from any claims on title. So, what does that mean? Claim on title could be anything referring to any losses or claims from title issues. So, if there is a lien on that comes up after you purchase, if there is some kind of probate issue where the seller that sold you the property wasn't the proper owner of the property, that policy will protect you. If any violations, code enforcement liens, tax issues that didn't show up when the preliminary title search was done, that policy will protect you and the lender.
So the essentially the process of somebody buying a property on the title side it goes, they get an effective contract, they apply for the loan, then you start the title process on your end. So that's when you try to find all the open permits, the violations, etc. But you're saying the title insurance policy covers you after closing for anything that you couldn't find or wasn't reported before the closing when you were doing your due diligence. Is that right?
Correct. And the policy does live with the owner so long as they don't change how they took title. So it is a one time purchase and it stays with them. So it'll protect you 20 years down the line if a title issue comes up, so long as the the property stayed in the same name of the original title owner.
And you mentioned something there that I come across very often, which is somebody changing the title to a property. And I always bring up, this could affect your title insurance policy. When somebody adds a spouse to the title, somebody quick claims a deed from personal to a company name, an LLC, and so forth. Can you kind of go a little bit into how that or the change of title affects or may affect a title insurance policy?
So anytime that a quitclaim deed is recorded, the title policy does become void. It no longer covers from that point forward. You are able to repurchase title insurance at that time, and it is at a discounted rate. So you can always reach out to somebody and buy just a supplemental policy to the new title owner. But what I always suggest, usually when I have a client who's looking to change title, I'll always ask, how long have you been the owner of the property? Usually, if you've been an owner of a property for 8 years, 10 years, the likelihood of getting a title claim at that point drastically shrinks. It's not that it doesn't happen, but it's less common that it'll happen. Usually, title issues come up within the first couple of years of home ownership.
Yeah, and there was a case that I came across once that buyer bought the property. They got title insurance. We went through the whole process, etc. They bought a foreclosure. 3 months later, a new mortgage came up, and luckily, title insurance covered it. So,
Yep.
to your point, if somebody's owned the property 8, 10, if they've been 10 years, if they've been the only owner on the property, very unlikely that something would come up against the property that you didn't know about. But when it comes to things like buying foreclosures, short sales in particular, it's title insurance is one of those things that's very, very important to have and to understand what it's covered, what isn't covered. There are some times that title underwriters would exclude certain things from a title policy. So it's very important to have somebody that you can trust and have that communication, that line of communication where if there's something excluded or if there's something that's not going to be covered fully by the title insurance policy, they need to tell you. So I think that the the title insurance policies that are issued at closing, when somebody tries to change the title on through a quick claim deed, which is something that happens very commonly down here, from a personal name to an LLC, thinking that they're going to add a layer of protection to their property, they're actually going backwards
Reducing.
in terms of protection, right?
Yeah. Yeah.
So
Um,
when it comes to the owner's title policy, is there or a lender's title policy? Is there a difference to what one covers over the other?
the difference is that the owner's policy only covers claims from the owner, and the amount of coverage is based on their sale price. For the lender's policy, it's covering only the lender and it protects the amount of the loan. So each of them protect each party separately. And if there is a claim, it'll protect the owner from how much they expended on the house. So let's say they're claiming a lien on the title from the prior owner for 100 grand. That policy will cover 100 grand so long as the purchase price and the loan amount was higher or equal to 100 grand.
Gotcha. So is there anything that investors can do, or people that are, maybe they own a property and they're becoming investors and they're considering changing the title on their property to an LLC or to a trust or something like that? Is there anything that they can do in terms of further protecting their asset other than, maybe not changing the title and just keeping the insurance?
So I always suggest at the time of closing that you really consider how you're going to take title. If you want to include any heirs in your title, that can always be done by the title company. If you're going to do it in an LLC, you might as well have it set up in the beginning. I know there's some times when you can't purchase because you have a loan or you're getting a loan and the lender's not allowing you to purchase under an LLC. But ultimately, those changes can even affect you in regards to your loan. Your loan can be technically accelerated if the lender realizes that you changed how you took title without letting them know. So,
Yeah,
you know,
and so we have different options when it comes to that. There are some of our lenders that just allow you to close under an LLC, which is fine, or a corporation and so forth. But those interest rates, those terms are typically not as favorable as if somebody were to buy the property under their personal name, because of just a risk factor to the bank, right? If an LLC owns the property and you finance the loan under the LLC and you default, then who does a bank go after? Which is why you have better terms on any loan that's signed off by a person, right? So now the problem that we encounter is that, going back to what you mentioned about the acceleration clause, if somebody buys a property under their personal name and then tries to transfer it to an LLC or a corporation without the bank knowing, they run the risk of getting their loan accelerated. That means that the bank did a loan for person X, and that person X no longer owns the property, so they don't own the asset that the bank did a mortgage on. and therefore the bank can actually come in and say you have to pay me in full within X amount of time, typically 90 days. So they do run that risk. Now, another option that we have, uh, you number one is buying the property under an LLC or a corporation up front. The bank knows, title insurance, title company knows, everyone is aware of that transaction. The other option is buying the property under your personal name and then doing a quick claim deed at closing to an LLC. Now, if we underwrite it that way, the underwriter and the bank are fully aware this is going to happen right at closing. I buy it under my name, I transfer it to an LLC right at closing. Now, when you're writing the title insurance policy for that type of scenario, do you do it under the personal name and the LLC, or do you add an addendum to add an LLC at closing? How do you handle that?
It really depends on how the transaction, uh, I guess, is formulated. So if the actual closing is happening under a personal name, the policy does have to be under the personal name. Um, there may be ways where we can reach out to underwriting and say, this policy, there's a quick claim deed simultaneously being recorded, so we want the policy under the LLC name, and they may be able to work on it since the title search and everything was done uh, simultaneously with the quick claim deed. Um, but they may require, again, a reissue rate to be collected, so an additional premium to be collected for that
Would
second
they
policy.
be able to do two title policies, maybe one under the personal name and then one under the LLC? Is that something?
Well, yes, but the last one is the one that will ultimately have the coverage. So the first
Gotcha.
one will be uh, issued at the full premium price, and then there'll be um, basically a lesser fee to
Sure.
reissue to the new LLC
Yeah,
name.
and it may make sense to do something like that if again, the most common way of us doing that for investors is you close under your personal name and you quick claim deed right at closing. Now, if the title insurance policy is issued under my personal name, I want to make sure that when I transfer it to the LLC, that title insurance isn't voided, especially if I'm buying something that has had many owners over the years, if it's a short sale, if it's a foreclosure. So it may make sense at that point for me to pay the extra money just to have another layer of protection for my
Yeah, and
asset.
you can
So
also, so at the time of processing title, there's a title search and a lien search requested that shows any possible defects. So if you have a title search that comes back with a bunch of issues, it should be a red flag that although those issues are going to be corrected, there may be the possibility of future ones as well.
makes sense. And does you mentioned the open liens and open permits. Can you kind of just touch on open liens versus open permits versus uh, what's illegal structures? Like what are some of the things that we need to be looking out for there, and how does that affect title?
So I guess all of those are in some way a title defect. You, in order to issue a title insurance policy, we have to clear anything that comes out on a title search. So any liens that actually are recorded in the county that attach to the property have to be corrected, or if not, they would be excluded from the policy. However, in the lien search, there will be other items that show up, like open permits, like illegal structures, like code enforcement violations. Those items are not necessarily liens and are not recorded and attached to the property, but they could be in the future if they don't get fixed or paid. So open permits can be, uh, they can exist for different reasons. An open permit could be that someone took out a permit, never did any work, and never closed it out, which that's an easy fix. A call to the county can easily close it out. An open permit can also mean that there was a permit that was opened, work was completed, and a contractor was not paid yet, so therefore the contractor has not closed the permit. In that scenario, it's important because that could potentially become a lien if they are never paid and never close it out. They hold a lien position They record a notice of commencement in the county, which needs to be closed out as well. So those things are not necessarily required to be corrected at closing in order to issue title insurance or in order to close. However, it's strongly recommended that they are. Um, a lot of times, I suggest to my realtors and my agents that they put a clause on the contract that states that the seller has to correct these issues because it is not a requirement per the contract either. So if
Right.
you're buying an as is property and you don't put that clause in there, the sellers can ultimately say, no, I don't need to fix that. You're buying it as is. It's your responsibility to close it out.
Exactly. Yeah, that's it's a very good point because ultimately open permits are not title issues. They can become title issues, but they're not, right? So you're 100% correct there, and it's one of those things that if a unexperienced realtor writes a contract or completes a contract, gets it effective, and they didn't add in that verbiage, and now you get to the title search and you find a bunch of open permits, like for example they put in a fence, or they opened up a permit to put in one type of fence but they did it another one. So like how, like so many things can come up there and the seller can just say too bad, i'm I'm not paying
and
for it,
then
I'm
and
not
then the
going to.
buyer is at jeopardy of losing their deposit if they don't close that way. So it's important that that's in there. It should be on every contract. Sometimes I turn back my contracts and tell them, you should potentially look at putting this for your buyer. So
Yeah,
it's
and
important.
what about just illegal structures? And something we come across often is, they've added, someone's added, or a efficiency
Yeah,
or an extra room in the
South
back.
Florida is an interesting market. Everyone does things without permits. And again, it could become an issue because the county will impose code enforcement violations, which can ultimately also become liens if they're not corrected. There are a few cities that require reoccupancy certificates, and basically, what that is an inspection of the property to confirm that there's no illegal structures or additions that weren't done with permits, and it can ultimately cause a problem later on. So if you have, let's say, a shed in the back that you didn't get permission for, that's an easy fix if it comes out as an illegal structure because you just have to tear it down. But if you have a bathroom that was done without permits and your neighbor reported you that you did illegal construction, and then you get a code enforcement violation on this, it can cost the new buyer a lot of money. Bringing down a bathroom or making a bathroom legal with the county might, take a lot of time and money to get it
Yeah.
fixed.
No, and it's very difficult to add, to be able to add a bathroom to an already approved and standing structure, mostly because just of city planning. There's certain, the water plant, for example, the plumbing, the traffic, all of that is already being planned for and approved. And think about it: if everyone just adds an apartment or two to their backyard, you're maybe doubling the population in that area, and that stresses out the utility companies, and ultimately just the city or the town cannot sustain so many people, so things start to deteriorate and fall apart. So it's not so much. And then also, of course, you have the safety concern, where how are these illegal structures being added? Do they have impact windows, or the roofs safe and so forth? So there's many different reasons to why the city is a little bit or so strict about adding additional structures. So when it comes to just illegal structures, I always have, I advise the realtor and the buyers just to kind of go by their gut feeling. If it's something that's easily fixed, if it's like a roof in the back, some just for shade, something that could be removed, it's I don't see that as a problem. If now you walk into a property that has an extra room or two added to the structure, now that becomes a problem, or potentially become a problem, right? And when it
More
comes
so,
to,
it becomes a problem even with sellability. Once they go to sell, the next
yes,
buyer might not be willing to take it on. So
Exactly.
it's
And it's not the same as closing off a room, right? If you have a 3-2 property and you close off the master bedroom, for example, something that's very common, and you just rent it out on like Airbnb or something like that, that's fine because you're not adding any additional stress to the system. You're not adding square footage to the property. So in those cases, you're fine. Sure, there are some, requirements in terms of fire safety and fire hazards and things like that, that you have to keep in mind. But rule of thumb is if you're not adding square footage to the structure, then you're fine, right? Most of the time when you're closing off bedrooms and so forth, there's really nothing to be concerned about. Now, I want to kind of go back to the foreclosures and short sales and title insurance for those kinds of properties. Now, when the market crashed back in 2007, 2008, we had most of the sales in the market were short sales or foreclosures, right? Some people are saying that we may go back to a foreclosure wave, towards the end of this year, maybe next year. I don't see it. However, it's always good to be informed and prepared for something like that. So, in the event that we go into a foreclosure wave or that we get an increased inventory in foreclosures and short sales, what are some things that title insurance or you as a title company look out for to make sure that the buyer is protected when they're buying these properties?
So again, it's basically the same as purchasing any property. It's the search is gonna look for any unpaid mortgages, so anything that's owed, any money's owed, tax liens usually, any deferred mortgages, anything that the prior owner of that's foreclosing handled. So if they did go through a bankruptcy, we're going to make sure that every requirement of the bankruptcy has been met. Basically, anything that attaches to the property in regards to the foreclosure will be addressed. It's just important that the search is done with a good title company and a good underwriter. And again, the lien search, anything that shows up there, usually if you're in a foreclosure, you haven't been taking the care of the property in general. So if there's an association, there might be unpaid association bills, there might be unpaid taxes on the property, and all those things will come up in our searches.
When it comes to HOAs, what's the maximum when a bank forecloses on a property? What's the maximum amount of months that an HOA can go back and charge the client or the property the HOA fees?
I'm not sure if there's a Florida statute limiting that, but I think it's unlimited. Any months of non-payment, they'll show up on the estoppel to be collected.
So I
Um,
remember back in 2008, 2009, actually, when the properties were beginning to come on the market, foreclosed and so forth. A lot of these condos were adding on like 20, 30, $40,000 in HOA fees. So it's very important for an investor when they're trying to buy a foreclosure or a short sale that's a condo. We have to look at the past due condo fees. And one of the ways you do that is through an estoppel letter. You get this
Correct.
directly from the association. The associations essentially give you a payment schedule or a payment history for the property. And that tells us how much that property is past due.
Yeah,
Now, with
usually in those cases, there's an attorney already hired. So there is penalties assessed and attorney's fees, and the amounts end up accumulating and getting larger. So we'll have to request an actual payoff from an attorney's office, showing the bulk of everything that's due in relation to the defaulted HOA payments.
Yeah, well, thinking back to 2008, 2009, I I've been in the real estate market since 2006, so I went through the crash. I got in right, as it was peaking, and then the market crashed. So I learned, I quickly had to learn what a short sale foreclosures were, the whole process, right, of going through an entire short sale process, which could take months. Now, one of the reasons why I don't see that happening again is because of the forbearance programs. There's a lot of fail-safe laws that were put into place to prevent something like that. And then ultimately there's a lot of equity in the market. So I don't see where or a scenario where somebody's behind on their mortgage and not have any equity. I mean, sure, it happens, of course, but it's not so much where the bulk of the sales in the market's going to come from short sales or foreclosures. Now, from your point of view, what's your take in terms of the market going forward, with foreclosures, short sales, or just the market in general?
I agree with you. I don't think we're in a bubble. I don't see many people not paying their mortgages. I did have a conversation this week with someone who brought up a good point, that maybe some individuals who are investors, um, and their renters weren't paying them rent for a whole year during the pandemic, that maybe they didn't pay their mortgages. But then again, I'm like, if you're an investor and you know that your property is gaining in value, you probably don't want to lose it either. So you
Right.
probably were paying your mortgage. So
Yeah.
I don't foresee, I know there's some, I know there will be some
Sure.
foreclosures, but the percentage is going to be very minimal.
Yeah, and to your point there, the forbearance programs, I mean, there really was no reason why somebody should just stop paying their mortgage, right? So after the forbearance programs ended, sure, depending on the lender, some lenders required a payment in full. Most lenders moved your balance to the end of your loan, and some lenders just required a modification of the loan if you couldn't move it to the back, or if you prefer not to move it to the back, right? So I completely agree with you. I don't think there's going to be a crash. I don't think we're in a bubble. So that gives me some positive vibes from you. I really appreciate the insight on that. uh, Going forward, I am going to keep an eye on the market and how it behaves in terms of short sales and foreclosures. I want to make sure that anything that comes on the market or any market trends relating to foreclosures and short sales, I want to be on top of them. I want to kind of get ahead of all of that, especially for my investors, right? Uh, we're not only looking at first time home buyers in the market. I think investors in particular need to be ready to capitalize on any market corrections that come forward, and if a foreclosure or short sale wave comes, I want to be ahead of it. So uh,
Mhm.
Magda, thank you so much for the insight. Is there anything else that maybe we should know about, keep in mind on title, anything going forward that advice for the agents, the buyers?
I think that the market, at least here in Florida, is going to continue to be fruitful. So I think that there might be some agents and lenders that get out of the industry right now. But the good ones and the strong ones will make it through it if anything does happen, just like 2008. So I think we're good.
Yeah, awesome. Completely agree. Thank you so much for your time, guys. Thank you. If you have any questions or comments, please leave them below. Magda, I'm going to put your contact information below also in case anyone wants to reach out to you directly. Other than that,
Awesome.
guys, thank you so much and stay safe. Until next
Thank
time.
you for having me.
See ya.